be able to come back over every single one of the lows, and they're like, oh, hopefully one of the lows didn't hurt you. That's what they'll be like. After every single person's gone, they swipe and just take back every single one of the lows that hurt the most people. Like the paddle pattern. When we go down like this, and we chop, oh, hold on a sec. You notice that there's a difference between the paddle pattern lately. It's been coming down on a 3 move pattern, and then it starts chopping. Like, let's go to the 15-minute real quick. When we go to this, do you notice how it was 3 moves, and then we started the choppy? Like 1, 2, 3, choppy, choppy, choppy. And then 1 minute, 1, 2, 3, choppy, choppy, choppy. If this smaller pattern takes us back to the chop, who says it doesn't end when the other one does? Which is taking back all of these difficult times that anyone tried to go long, and it's just too tough for them to survive. Because they're clearly late, buying from the first dip off of all-time high. I'm like, it's disgusting. But it might be too tough for most people to understand. And that's fine, because as long as you know what position is valuable, it is to capture the lows where nobody else can. They'll know they only have a few people left to deal with. And the people that struggled on these lows, I find it very, very interesting that, we've been presented with a bunch of lows here where everyone was in this kind of choppy zone. And then we come right back over all that choppiness like that, just like, oh, sorry if you got stopped out. It's like, yeah, I see it. They just want you gone. The other side of the node now becomes interesting to me because it's not a move that we've ever done in this trend. When we have made this as the entire node, I do think that we're going to be interested in this top side again. Slightly lower low on the last low, but not quite the 188. An interesting stretch to try and get it though, and that's what it felt like, is a stretch to try and get it. ATR is still hanging around 10 there, absolutely fine. Just remember, like I said before, every single one of these lows that we've made past, we've offered more than 10 points to get back to the previous one. Like every single time. There's been no move back to any low that we haven't been able to make more than 10 points. When it offers that 10 points, it demands that if it's running into a resistance at that 10 points, you want to make sure that you're protecting it. I'm under the impression that it might still swipe some lows, so the 188 hasn't actually officially been tested yet, which is interesting. Everybody that's been trading it's been getting a bad price on the 188 because it's not the 188. But everybody that's been trading it early will become liquidity at the 188, which is funny to me. Because where's everybody stops? The 188? These are good moves here. We could see they're going to test the waters and see if people will chase it. Like the smallest 15-second expanding triangle means that all the people that start out in the triangle, that start with this volatility, get overlapped in the next move, and then they get overlapped in the move after, and so on and so forth, but on a very, very subtle scale. But it'll create the same uncomfortability that is created on bigger patterns. It's just for the people that are involved with this one. That's what I can see. The water testing is going to come here soon in a second out of this consolidation. Perfect window is arising. As we get closer to that trend, and like to most people, it just looks like, we're going sideways into nothing, but something is coming. And the danger is not being able to exert energy to continue with the trend. Because if it can't exert energy to continue with the trend, then it'll be forced to break it. And because the past few trends haven't broken well, doesn't mean the next one won't. Now we have to remember that we are inside of a downtrend until the red-yellow line breaks. Well, there's even more beyond that, but that is the first step in the major trend breaking sequence, where the imbalance is actually on the screen now, just to give a visual representation of that. It'll be a thing the institutions are looking at where they fear losing control and imbalances, so they like to make sure they have extra control. And putting the people right where they want them is typically what we do, which is usually in the middle. And that could look like the POC, the high of the node, the beginning of where we saw the three moves, 1, 2, 3, and then started chopping. The high of that node, where it all ends for the people of this consolidation. But holding and hoping is not a way I agree with. If it's ever even a consideration, expect to lose. Like, holding and hoping is not good. Fighting for a small profit to secure your exposure is the only thing I've ever agreed with today. So finding that short-term target, making sure you're paid on it. If you're not, then you scrap the whole thing and find somewhere you can be paid on it. It's that strict because there's no room for success unless you're making sure you're paid and making sure that your exposure is safe in the event that it's taken back, which I said you want to make sure that you're expecting it to every single time. And you will go, if it has to be hundreds of times, then that's absolutely fine. But if you stick to it, then you will end up with the lows, and that's what counts. The next step will be to not give them up, because it conditions everybody that in the event that they catch a low, it's taken back from them. Catch a low, taken back from them. Catch a low, take it back from them. Like, again. What do you think that's going to condition most people to be like? Well, when they see a little bit of profit, they're going to try and take most of it. They're going to try and take all of it a lot of the time. And there's going to come a point where the market expects you not to do that. And a lot of people will shave off the position so much that they won't be able to benefit off of even getting to the biggest B point or getting to the high of the node, because that's where the chop ends. We've just turned everyone that was late on the 188 into liquidity for the 188. This big volume right now is institutions buying ordinary people's stops that thought it was at the 188, but it actually just hit the 188. And I can see that. A lot of people were eager and so on, but not too many, because it's not like there's an incredible amount of volume here, but I can tell some of the volume that we've used to stop people out has went directly onto dark pools. Like, don't you think it's funny that there's no ordinary buyers there, and that we're getting a lot of this movement? It seems to be very particularly associated with buyers, yet there was none of the ordinary people at the bottom, because they're using all the tools that they have to make sure that people are out of the way. They don't want people to see that they're buying huge volume at the lows. They come back to the point where the exciting started, and that's a move that tells me that they had to deal with chasers. Like, they just had to deal with them right there, because people bought into the green excitement, and then all of a sudden we had to come and stop them out. It's to this point where they might just pay for the chasers to get screwed. And how do they get screwed? Well, they take profit too early. And that's what the institutions wanted to avoid, is because people that try to buy here, they're not selling at the targets, they're not selling at the high of the range, they're trying to sell at a point that obstructs the institutions from breaking the trend. And every single time that they do that, it's that much more expensive for them to actually break the red-yellow line, because they have to buy people's positions out in order to get to the next level. Like, if there's 1,000 people selling at 19,550, then you have to buy every single one of them out to get to 951, to get to 551. So if we come down and just knock their stops out, then they can't sell anything, because the day's been full of that. Now, the institutions have all the time in the world and all the patience in the world, and it really shows on this move here, as the 188 is effectively working. They're trying to make it work, I can see. And it wasn't because of the people that initially took it. I could tell instantly that we were going to come back and use their liquidity, and the institutions are like, here we are. Everyone thought it was the 188. It didn't even touch it yet. And everyone that actually bought above it put their stops where? On the 188. And they weren't there taking it because they were busy getting stopped out. And every single one of those lows that made everyone so freaking distraught, it's just like slightly lower lows, like the smallest increment it can possibly make to go lower, it chooses that because it's painful for who? The individual. We can tell exactly which way they choose to implement their singular entity-like orders. It's like a singular entity demanded that the 188 gets to the B point. The B point has a gap too. And I'm like, at a point like this, it's like, so what if it comes back and knocks the whole thing out? I say it's a stage where we're getting close enough to the red-yellow line that more should be held, that less should be sold, that less security should be taken. Because if you've been protecting it every single time on every single low, now comes the time to let some run through the B point. Here's the B point, and they want people to sell here. That's why they pause, so they can't sell higher. And they're like, suckers won't be able to sell higher if they sell here. That's the reality of it. Things have changed, but the people don't think they have, because they only remember how they've been affected. But remember, when's the last time we had a trend break like this? You know? Is it allowed to retest it? Well, it should be, but it doesn't actually have to. That's the funny part about it. Because now we've broken down 3 trends and we're closer to the major one. We're closer to the high of the range. We've essentially taken out every single one of the lows in the consolidation. Anybody that struggled here or any of these lows was literally just taken back to the bottom of where those lows began. So anybody that was stopped out and actually committed to a loss, like, we're back at the first low in this entire node. So all of the people that were going long and struggling with staying long, it's now in vain, because we've come back beyond where I think 80% of the people were stopped out. I think 80% of the people were stopped out on this low, and all of these lows. But it's hard to say that they were stopped out above those prices, because these are the lows that increase in volume and get people stopped out. Now, I'm looking for the other side of the range. That's where it all ends. Like I said 1,000,000 times, everybody's difficulty's in vain. They're laughing at them for trying to go long so close to all-time high. It's not the institutions. If they're buying assets that they're either locked into or that they need a lot of liquidity to get out of, that means that they're putting themselves in a position where they can't handle a dump beyond this point. And it's like, if they take a hedge that's large enough, do they have enough liquidity to cover the hedge at the lows before it comes back up? Because if they are hedging a too big of a position size when the lows don't have enough liquidity to cover the hedges, they'll have to think 2 moves ahead, where the individual is only drooling over the current move in the next one. I can see the plan goes far deeper than the move after the next one. They're already thinking about it, and I think it pays to understand what the opponent's move is going to be when you've made yours. And they've made their move, and they can see that the people have minimal impact. There's not much bleeding off of this 188 at all. And in fact, the way that they decided to bring it up there is unlike any other way that they brought it up before. We can see that there is a movement that we're doing pretty much casually in this consolidation. Here, here, and here. And each time that we've done that move, we've never done more. If you consider this more, I'm like, whatever, it's not more. When we actually make more and it's clear, like when we double it, things have changed. Because we're not doing this crap anymore. And this is the first sign that, things are getting different. They ended the consolidation. They tested the waters. They found the moment to thread the needle off at the bottom where they finally got it. So most people were sellers at the bottom. Most people were sellers at the bottom. The blue is buyers. The orange is sellers. And the farther we get into a best price for buyers, the less people there are, right? Because you don't see anything down there. And those are all the people that found value in that price. They all found value somewhere else and gave up. So funny. But the market knows, 218, remember? Most people can't hack it to that time of the day because they want to be their own boss and end their day early and enjoy the weather and stuff. Well, you're not going to end up with the best price. You're not going to be the best. If you focus and you work and you don't let anybody have an edge on you, then make sure. Look at this going the right way. At the end of the day, a lot of people didn't see this coming because they weren't interested in it ending with the high of the node. Let's take a look at this for a second. Because while the market's roaring through the highs, like, I didn't sell at that B point down there. And I said not to sell at the B point because suckers sell at the B point. We're not selling at that B point. We're running right through that goddamn B point because it's the time to hold. Like I said, the time to hold, not the time to give it up and protect. You reduce the protection. You put the risk on. That's the idea. Now is the time. And it's like, now it pays to do that. Clearly, it has been known to go beneath the 11 low zones when it's not at a daily extreme. When it's not at daily lows. I mean, how far we are from daily lows? It's insane. The institution is actually accumulating the most at these points at the daily lows. Once they have accumulated, they're not afraid to pull back even more to make it difficult for people to chase. So it's like, hey, the daily lows were made like this, where we pull back to the 78 and then we go up. And now that we're not at daily lows, we can do this because we're not affecting institutional positioning from one day off of all-time high. Are you kidding me? No way. No way. Beautiful movement. This is all exactly going to the high of the dode. If you ever want to scrap the chart and start afresh, I could do it and get the same results. It's not a matter of clinging on to any information. It's a matter of putting the tools down to understand how they work. Do you understand how the tools work? Because then you can use them. This is a move where we've taken back all of the most difficult part of the day and even come back to everyone that was stopped out on that first low, being like, oh, hopefully this didn't affect you negatively because we're back at where you got stopped out on the first low of the day. Everything was just bought back out. Like everyone's business was all to just be late, trying to catch the trend, and then all of a sudden paddle pattern slaps them in the ass and we're back up.
That's the idea.